Thanks for downloading this episode of the Resilient Advisor Podcast. My name is Jay Coulter, and on this episode, I'm going to outline the implications of the GICS Reclassification for financial advisors. Now, advisors who use sector index and index products developed by Standard & Poor's and MSCI are going to be affected by this change. These changes are going to have an impact on about 40% of the S&P's entire market capitalization and about $17.6 trillion in market cap. This includes 10% of the S&P 500, 100% of the telecommunications services sector, 22% of the consumer discretionary sector, and 21% of the technology sector. If you haven't been paying attention, these revisions were announced in January, and the implementation happened on September 28th of this year. Note that the MSCI Equity Indexes are not going to reflect these changes until its November semiannual index rebalance. From a high level, there are three sectors that are going to have the largest impact: telecommunications, consumer discretionary, and IT. For some historical context, the existing classification system was developed back in 1999. This change was really overdue, as it reflects the natural evolution of these sectors and the companies that underlie them. So if you find yourself needing to explain to a client these changes, simply point out that they're the continued integration of media, internet, and telecommunications has led to clear industry consolidation, which you can point out through all of the mergers and acquisitions. So here's what you need to know about the impact on each sector, and I'm taking this directly from a fantastic report from Dividend.com. In the telecommunications services sector, under the proposed changes, this sector will be renamed Communication Services. This is designed to be a more inclusive banner that account for content developers and other media. This new sector will include existing telecommunications companies, as well as enterprises from the media industry group, which is currently sitting in the consumer discretionary sector. This will also include companies from the internet and direct marketing retail industries. So, some big names that will fall into this sector are going to be Google or Alphabet and Facebook. Next, the consumer discretionary sector. The internet and direct marketing retail sub-industry, which is currently under consumer discretionary, will be updated to include all of the online marketplaces, including eBay and Alibaba. And finally, in the IT sector, it will undergo a major overhaul, with the internet software and services industry being renamed Internet Services and Infrastructure. Companies such as Shopify will be impacted. My friend Brandon Hatton of the Hatton Group at Raymond James in Atlanta sent over a detailed report produced by BlackRock on these changes. I recommend connecting with your BlackRock rep and getting a copy if you need more details on these changes, but here is their key investor takeaways. A direct impact will be felt by investors who own funds that follow or are benchmarked to indexes that follow the GICS. The secondary impact will be felt by sector rotation, diversification, and hedging models that adopt sector constraints. And I know that's a wide market amongst our listeners. And lastly, a tertiary impact will be felt by active managers whose investment process monitors sector fundamentals, factors, and trends. Lastly, if you're a dividend investor, the telecommunications sector provided yields north of 5%. It almost served as a bond proxy. The new communications sector will yield an average of less than 2%. That's going to have an impact as you build out your models. I hope this podcast was useful as you look at your fourth quarter allocations and start planning for 2019.